Thank you, and welcome to our audience. Today we're going to be talking about unemployment insurance. We're going to be talking about managing and planning 2017 taxes and liabilities. So we're talking about unemployment insurance, and let's get started. If anyone has any questions, we'll have time after the presentation to respond to your questions. So let's start with a question. Employers have received their 2017 tax rates by now. Everyone should have. You should have all your tax rates. So as you look at your 2017 tax rate and compare it to perhaps previous years, what has happened to your tax rate? Has it gone up? Has it stayed the same? Perhaps there's no change at all. Perhaps you haven't received your tax rate, although that's probably unlikely, or you're not sure. So one of the things we found as we approach we're now in 2017, is that most tax rates have gone down from where they were as recently as 3 or 4 years ago. Of course, that was the effect of the recent recession we had. So all tax rates generally went up, but most employers now have gone through that, are now managing their employment patterns, and most employers now have lower tax rates than they did in the recent past. So that's the good news. But as we look forward to the future, we see that for 2017, your tax rates are now set, and as of June, that will be the end from a rating standpoint, for 2017, and the 2018 tax rates will now be based on your experience through June of this year. So we have a couple months left to affect the 2018 tax rates before they're assigned later this year. With that in mind, then, now is the time to gain control of your the UI factors that will affect your 2018 tax rate. So still not a lot of time, but we can still at least plan for what's going to happen now with the 2018 tax rate, prepare for that, and gain control over the tax rate issues. Additionally, we'll also have